Hey investing friends, in this video we reveal our entire $172,000 Tfsa Dividend growth portfolio for the month of September. The stock rally is real and alive. Let's do this! For those new to the channel, this is my portfolio reveal, where I share every stock in my portfolio, go over earnings highlights, and share general news about the stocks I own or want to own. I also go over our industry/sector weightings at the end. And in this video specifically, I'll share my thoughts on Brookfield Corporations Investor Day. We were away much of October. That's why this video is out so late. And it's hard to come back to Vancouver's cold and rain. If you notice a different editing style, that's on me. It looks like I'll be taking over the video editing for now. I'm not as pretty as Mrs. Financial, when it comes to editing, that is. Now to kick things off, let's look at our smallest position, goeasy Ltd. It still represents 0.5% of our portfolio in the consumer finance industry. I'm looking to 10x this position in the near future, and will use the proceeds of my Fiera sale for it. Not that I have to sell Fiera to buy goeasy. I am sitting on a lot of cash that I do not show as a holding in my portfolio. Next, we have our second smallest stock by capitalization and market value, MCAN Financial. It represents 2.2% of our portfolio. There was big news on September 9th. There was announced that after a comprehensive search, Santok Burke will assume the Senior Vice President and CFO role on October 1st, 2024. He brings 30 years of experience with him. For example, Santok held a number of senior roles with HSBC in Canada, the Middle East, and the US over a 28-year career. That's a win in my books for MCAN Financial. Next is our smallest stock by capitalization, Fiera Capital Corp. It represents 2.4% of our portfolio. This is a position I'm ready to sell off once we get a good bounce on some good AUM news. It usually happens Q3 and 4 as end of year approaches. Next is our biggest financial position by market cap, TD Bank, at 2.8% of our portfolio. It doesn't really impact it much month by month at 2.8%. There's not much to say other than, boy am I glad the AML issue is over and done with so we can move on. I'm looking forward to their earnings in December. Our fifth biggest position is BCE Inc, representing 3.7% of our portfolio. BCE share price continues to struggle despite the drop in Bank of Canada rates. Its 5-year beta has been slowly increasing and now stands at 0.48. I still hold this position as it is bond-like in my portfolio. Its ex-dividend date was September 16th, and in spite of that, the stock finished the month flat. BCE Inc. reports Q3 earnings November 7th before markets open. Next up is the darling of the portfolio with the third largest market cap, Brookfield Corporation. It represents 3.8% of our portfolio and growing. The Investor Day presentation took place on September 10th, and our very own Warren Buffett of Canada took the stage and gave us some key facts. For example, Brookfield Corporation has compounded at 18% over the last 30 years. That's just phenomenal. Brookfield's 5 guiding principles to compounding are principles we should all follow as investors. 1, they are invest in good businesses. Duh. 2, run those businesses well. 3, allocate excess free cash flow wisely. Currently, BN retains about 75% of their annual FCF, and yet has still returned $20 billion to shareholders over the last 5 years. 4, align everyone with a long-term vision. About 90% of senior management's wealth is concentrated in Brookfield. They don't just have skin in the game. They eat their own cooking, as they say. And lastly, evolve with the world around us. What did I take away from Investors Day? Well, management has these crazy lofty goals, and they expect to reach them. Growing annual cash flow by over 20% over the next 5 years is no joke. Enough about Brookfield. The next stock in our portfolio is Fortis. This OG utility continues to benefit from the drop in interest rates. It now represents 4.7% of our portfolio after another 4% gain this month, which is lagging the overall portfolio. Investor Day was September 26, and here are a few highlights. a 4 to 6% dividend increase until 2029, a 6.5% base rate CAGR from 2024 to 2029, $26 billion capex until 2029. That's a $1 billion increase. All good news to go along with Fortis dividend increase of 4% to 61.5 cents for Q4. We dripped one share at $57.88. That added $2.46 to our annual dividend income at a yield of 4.3%. Next is Manulife Financial Corporation at 5.1% of our portfolio. It is our one insurance company and ranks 11th in size in our portfolio despite ranking 13th by book value. This is mainly because the stock price continues to rip and is up 7.5% on the month, 37% year to date, and 74% the past year. This growth is paired with nearly a 10% CAGR on its dividend. It has been providing very, very, very healthy total returns. Manulife Financial Corporation reports Q3 earnings November 6th after markets close. Next is Telus Corporation. It represents 5.3% of our portfolio. With Bank of Canada's rates dropping, we'll continue to add to this position. It is very much unloved, undoubtedly, and undervalued in my opinion. With less and less capex needed, best-in-class offerings in the West, and dropping interest rates, I can't see Telus remaining at about a 25% discount to historical norms. So we added 10.023 shares at an average price of $22.43, a little high for us. That added $15.60 to our annual dividend income at a yield of 7%. Next is Pembina Pipeline Corp at 5.6% of our portfolio and nearly a 5-digit holding. Our pipelines are doing very well this year. Pembina is up 4% on the month, 30% year to date, and over 41% the past year, not including its dividends. For some pipeline news, Pembina is going to buy some infrastructure assets in Alberta from oil producer Vernon Inc. Formerly it was called Crescent Point Energy, I believe. The cost is about $400 million, and that's to strengthen its midstream operations. Why is this important? Well, as reported on Reuters, consolidation in the pipeline and storage sector has been on the rise since last year as North American production grows and as hurdles in getting new energy infrastructure approved and built have made existing operators more valuable. I couldn't agree more with that statement. The deal is expected to close in the fourth quarter of this year and yield about $50 million in annual adjusted EBITDA, of which about $30 million is net to Pembina. Pembina Pipeline reports Q3 earnings on November 5th after markets close. Our next position is Enbridge, our second midstream pipeline at 5.8% of our portfolio. This month, the share price has stagnated after stellar returns of late. It's up 14% year to date, 30% on the year, not including dividends, of course. With natural gas here to stay, I can see Enbridge testing its all-time highs of 2015. Considering inflation, Enbridge, though, has a long way to go. Enbridge reports Q3 earnings November 1st before markets open. Next is TC Energy Corp. It represents 7.2% of our portfolio and is just a few $100s behind Bank of Nova Scotia. I hope everyone is getting excited about SOB. Oh, South Bow Corporation. It's going live on October 1st. Everyone with a TRP share will get 0.2 SOBO shares. They're forecasting a 69-cent dividend for the new SOBO company, focusing in on dividends, and TRP focusing in on growth. With the new spin-off, the dividend between the new and the old company will remain the same, according to TRP. TC Energy Corp reports Q3 earnings on November 7th before markets open. Bank of Nova Scotia is next. It represents 7.2% of our portfolio as our fourth largest holding. Bank of Nova Scotia is up 9.5% on the month as the bank sector is catching up to the rest of the market. With a beta of just over 1, this generally is more volatile than our other bank. I see this continuing to climb as the risk-free rates continue to drop. BNS reports Q4 December 3rd. Next, we have First National Financial. It represents 8.2% of our portfolio. With the Bank of Canada continuing its rate reduction cycle, real estate activity should start to pick up again. As I've been saying for a while now, I anticipate a small special dividend at the end of the year. First National Financial reports Q3 results on October 29th. I'm really anticipating this one. Next up is RioCan Real Estate Investment Trust. It represents 9.3% of our portfolio. The share price continues to rally and is up 20% in the last 3 months. As rates drop in Canada, I expect REITs to modestly increase if, and that's a big if, employment and GDP remains healthy. Let's not forget that much of these rate decreases are already priced into the stock price, as the markets are forward-looking, forward-thinking. RioCan reports Q3 earnings November 12th. We dripped another 3 shares at a price of $19.41. That added $3.33 to our annual dividend income at a yield of 5.7%. And our largest position is Capital Power Corp, our energy producer that represents a massive 16.2% of our portfolio. As a defensive dividend growth stock, it continues to benefit from the lowering of interest rates. It's up 9% in September, 32% year to date, and 41% over the last year, not including its outsized dividend. Capital Power Corp will be releasing Q3 earnings on October 30th. And lastly, our one ETF is VFV, Vanguard's non-hedged S&P 500 Index ETF. VFV remains unchanged at 0.2% of our portfolio. This will be changing to SPY, as I mentioned in the video last month. Only one person guessed, by the way, why there's a change. Come on, guys, let's hear those guesses. We didn't do much buying this month. We deployed a total of $343.48. That added $21.39 to our annual dividend income at a yield of 6.2%. I believe in portfolio diversification for the upside and for the downside. So here's the industry breakdown of my TFSA as of September 30th. Diversified banks make up 10% of our portfolio. Midstream oil and gas makes up the largest at 18.6% of our portfolio. Regulated electric utilities make up 4.7%. Retail REITs make up 15.5% of our portfolio. Telecom services make up 9% of our portfolio. Life and health insurance makes up 5.1% of our portfolio. Independent power producer, we only have the one, makes up 16.2% of our portfolio. Asset management makes up 7.8%. Consumer finance, 0.5%. The S&P 500 makes up 0.2%, and of course, it's not an industry and our target is nowhere near there. And lastly, mortgage finance makes up 10% of our portfolio. You probably noticed this doesn't add up to 100%. That's because the rest is sitting in cash. Cash I hope to use on undervalued growth plays. Thank you so much for watching. Until next time, I'm Mr. Financial.